Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of June 9th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week was a roller coaster ride for mortgage rates. As we started the week, rates were moving higher. If you take a look at the bond chart on the screen, you can see the bond was selling off, the red candles down. Short-term trend was for rates to move higher as the bond sold off. But we were actually hammering out a bottom on Wednesday. The bonds were able to recover, as you see with the green candles, short-term trend upward. And we were able to hammer out a floor of support on Friday with some upward momentum in the bonds, which means we could see rates move lower if the bonds can break above where they closed on Friday. So we're going to recommend cautiously floating your Maryland mortgage rate to start the week to see if bonds can break above this level and mortgage rates could move lower. But if bonds sell off and continue to switch to a downward trend, then we're going to recommend locking your Maryland mortgage because that means rates would be moving higher. Now, if we dig into the big economic report last week, that was the May jobs report that came out on Friday, released by the Labor Department. 217,000 jobs created for May. That's down from 282,000 in April. So, disappointing number. The market didn't react real bad to that. So we're going to see how we start off the week. And then we had unemployment rate remained exactly the same at 6.3%. Seems like a good number, but not that great if you look at the labor force participation rate, the LFPR. That remained the same at 63.2%, a 35-year low. Now, the LFPR measures the number of people 16 years or older eligible or working that are actually working. So that's a much better indication of what's going on in the labor force. So unemployment numbers, if you stop looking for work or take part-time employment, you're not counted in that 6.3%. So that's misleading. So we need the LFPR to go up. We need more people to get back to work. And then the weekly initial jobless claims came out on Thursday, 312,000 claims. That was up from the previous week, which was also the previous week's number was revised higher from 300 to 304. But all in all, it was still a good report. Anything close to 300,000 in claims is good from where we've been. If we can stay there or even move into the 200,000, that'd be great news for the labor force. And then the housing news. Great report came out from CoreLogic last week on home prices. Home prices increased 10.5% year over year from April 2013 to April 2014. So great news there on the housing market. And then home prices increased 2.1% from March to April this year. And that was above the 1.4% we saw in February to March. So we've hit that spring market we've been talking about. We said that home price and sales would resume when we got into the spring market. That's what we're seeing from this report from CoreLogic. So that's good news on the housing market. We do see the spring and the summer market being good for home price appreciation. Now, we're predicting a 1% increase next month, which is perfectly fine. That's a sustainable level. The big numbers we had last year just weren't sustainable, as we said, so that's why home prices appreciation has dropped. Prices are still going up, just not at the rate they were. Now, in the local news, the next free first-time homebuyer seminar is in Towson, Maryland on Saturday, June 28th from 10 a.m. to noon. Now, that's at the Baltimore Sheraton North Hotel, right there on Delaney Road. You can register for that event by giving us a call, 410-412-3319, or online, www.marylandhomebuyersseminars.com. Look forward to seeing you guys next week.